Chat. I know I was supposed to make this video and drop it the other day, but I'm not gonna lie, I'd rather just give you guys a straight educational video right out the books, like old times, like old times. With that being said, today is July 30th at 2:05. The market is gonna close in 2 hours, and currently we are in a gold setup. As you can see, we are up $1.2 million on gold buys. Twitter. If you don't follow me, go follow me on Twitter. That's where I call out the trades. Also Instagram as well. Instagram and Twitter. Follow me on both if you want to. Put notifications on that. Put notifications on Twitter. Put notifications on Instagram. Put notifications on YouTube. Three apps. That's it. YouTube, Twitter, Instagram. You could do YouTube and Twitter. You could do YouTube and Instagram. Whatever works for you, whatever platform you use. But here I document my trades. Twitter, I post my trades. Instagram, I post my trades. And a little bit of life if you care about my life. But, you know, as it is, right? So with that being said, today I'm going to break down how I trade. I made a video the other day that was going into it and pretty much giving you how I trade now. I'm gonna post that one, but I'm also gonna post the second part. So there's gonna be part one, part two. So part one might be the same as part two might be the same as part one, but I'm just gonna repeat it again because it is July 30th, and you still are not trading correctly. Some of you guys, I'm proud of some of you guys. I'm disappointed in some of you guys. You girls, I should say you guys, you girls need to understand that you men and women need to understand that I can tell you everything, but you're going to be the ending factor of pretty much everything. Oh my God. You're going to be an ending factor of everything, right? LeBron James can teach you how to play basketball, but doesn't mean that you'll be as good as LeBron James because your work ethic might not be the same as his. He can give you the instructions, but are you going to really work and put the hard work into those instructions? So with that being said, I'm still going to break down everything, tell you how I like to do it, word for word, bar for bar, everything, thought process and all. I feel like we've been over this 1,000 times and you're just not listening. Anyways, yeah, I'm gonna do this quick because I'm trying to enjoy my I wouldn't even call this a vacation. I'm just chilling. I am currently in Turks and Caicos. Currently in Turks. As you can see, I need to be walking the beach right now, but I'm trying to teach you guys how to trade. Like, I really should be walking this beach. But I'm finna spend my next 15 minutes trying to teach you guys how to trade just for you not to listen. I'm disappointed. But anyways, let's get into it. Subscribe, like it. I need you guys to lock in, bro. It's almost the end of the year and y'all ass is still blowing accounts, still doing dumb shit. Lock the fuck in. All right, so right now I'm going to break down a couple of things that I've changed when it comes to my trading, and it's not going to be dramatic. It's not going to be like the craziest thing in the world, but what I will say is I've focused more on price action when it came to my entries. I'm gonna show you guys a little bit of how I break down the charts today. Whenever we do get a new entry, I'll break down my entry. Yeah, so with that being said, let's go ahead and get into it. So first and foremost, a lot of people know that now I do not use the 15-minute time frame for entries anymore. It just hasn't been like, look at this. If I go here, I'm not really getting too much. Like, let's say if I was to place like, let's say I place like a sell, right? If I place the sell and then I put my stop loss above previous structure, I would have got tapped out just for it to go all the way back down, right? So it looks different when you're on the 1 hour time frame and you put your stop loss here. So if we go here and then we put our stop loss above here where this already happened, or where all this happened at, and then we look for, let's say, a break. And I'm just giving an example. You see how price can fluctuate in between here and do whatever it wants. Now that's not a great entry, but just trying to show you that I don't use the 15-minute time frame anymore for any of my entries. I basically go off the 4 hour time frame. So I will always go off 4 hour time frame for markup. Still, that has never changed. Markups, right? And what I mean by this, because a lot of people sometimes get confused, what I mean is I would just go to the 4 hour time frame. I would come in, do this. Look, I'm gonna keep it real simple with you. Boom, do this. Be like, okay, current price is at 4,036. Let me go up. Okay, this is my high. Okay, mark. Okay, this high was created from here. Okay, that's my low. Boom. And that's it. That's all I do. That's literally all I do. Go from here. Oh, this is current price. This is where it's at right now. Like right now at this moment, it is at 4,036. Move my cursor up until I get to the high. Oh, I see that when it was here, it made it sell down to where it's at now. Okay, mark. Okay, I go from here. How did this come up to this high? How was this high made? I go all the way down to see where it came from. Boom, I run into it. Here's the low. If price is in between both of these, this means that this is a no trade zone. So now I know this is a no trade zone, right? And I can't trade anything. So with that being said, now all I gotta do is wait. So then I would come here. So I double click with both my fingers on my MacBook, click, or right click on your mouse, whatever you're on, or hold the screen if you're using your phone. Come here, crossing down, trigger every time. You can put whatever you want. I'm pretty sure I forgot how to add the name. I guess you can't do that anymore, maybe. And then I come here, set the alert. Now I have my alert things off, but if you want to turn it on, you can come here, alerts, alert line, boom. I set a lot of alerts, so as you can see, this one got triggered. Let's go ahead and delete this. I set a lot of alerts. I live off of alerts. Look at the side over here. Look, just look. Alerts, 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 alerts. I live off alerts. I can't function without them. Literally cannot function without them. So everything I see, if I want it, I'm gonna set an alert on it. Right? So set my first alert there. At the support of my no trade zone. At the resistance of my trade zone, set an alert there. Right? Your trade, let's say your trade should always, or let's say setup should always come, or let's say start out with a no trade zone, right? And this is for beginners because you don't always have to trade out of it. You can trade the continuation of something, but your setup should always start out of a no trade zone. Let's put it this way too. Your setup should always come out of a no trade zone, whichever way makes sense to you. So basically, you see my setup. This is my setup. Even if I seen the trade like this, so let's say I take this, let's go to ghost feed. Where is the ghost feed? Ghost feed right here. Let's say I was to take this, and this is my indication, right? Or this is my indication. Hold on, let me try it one more time. Ghost feed, boom, boom, right? To inputs, grab this. Let's say this is my indication, Oh, we have an indication. It came out of a no trade zone, right? It came out of a no trade zone. So this is our indication. So basically, if I wanted to get in this trade, I would need to see some type of correction. So we're just going to take this right here. And we're going to put this. And we're going to look for a correction. So let's say price came here. It gave us a correction. Once it gave us that correction, then we need to get into the trade again, right? So all I'm going to do is wait for it to come out of that no trade zone before I place the trade, so I can place this trade the next time. So basically it'll look like this. I'm trying to find, I need to just go ahead and save some of these on here. After all these years, I can't even find the, okay, cool. So then we'll have our stop loss above here, and then we'll target down here where that low is, right? And that's how I would want to do it. But basically, why I'm explaining this is your setup should always start out with a no trade zone. So we got a no trade zone right now. The indication is going to come outside of the no trade zone. Your trade is always going to be on the outside of the no trade zone. So basically, how we get the no trade zone, once again, we look at current price, we go to the high, we go to the low of what created that high, vice versa. So if it was sales, we would, let me see if I can flip it again. So if it was sales, I would go from the high, or I would go here. I would be like, okay, where's that low? There's a low. That low created off of that high, so the high pushed it down to make that low. All these things, right? So basically, once again, okay, this is current price, it's buying, right? Let's just say, oh, it's buying, it's buying. Where did it buy from? That's our low. Where did this low create from? This high. So once you find the low, go find out where that high was, right? Vice versa. So with that being said, that will create your no trade zone. Now, what will also make this a no trade zone is if price is in between that high and the low. So in between the high and low, right? And if it's in between the high and low, trade is on, right? So if it's in between the high and the low, then it's in a no trade zone, which then this is great for you. A no trade zone should not be looked at as bad. A no trade zone should be looked at as good, because it makes it easier for you to understand where price is trying to go, right? This no trade zone, if price breaks this and hits this alert, I know that price is selling. If price breaks above and breaks this high, I know that it's buying and it's moving in that direction. Because remember, there's buyers here. So buyers are pushing price up. They're buying price. When you buy something, the value of it goes up. When you sell, the value of it goes down. Sellers are here, right? So I know if price breaks here, there's no more buyers in the market to hold this up. There's no buyers that want to buy price. It's losing value, right? So when it breaks in one direction, I know that this direction is very strong, right? It is very strong. So with that being said, I do all of this off the 4-hour time frame, because this will help me set out my trades, right? It will help me get my setups. That's how I find all my setups. So with that being said, let's go ahead and take a picture if you want. This is how your setup should be. Go ahead, take a picture, screenshot, fast forward, pause, whatever you need to do. I'm gonna even take a picture for you. Right? All right, cool. So, anyways, remove all this, bring this back, boom, boom. From there, the 4-hour time frame is going to give me that indication, give me the correction. When it comes to entries, all I'm doing, so if the 4-hour is doing this, let's go here. Let's go path, let's go here. If 4-hour is doing this, matter of fact, it's not going to do that, sorry. The 4-hour is going to do this. It's going to be 1 candle, 2 candles, 3. Then coming back is going to be 1 or 2. right? And as it comes down, all I'm doing is when I start to see prices back under that level, all I'm doing is switching from the 4 hour to the 1 hour, right? The 4 hour to the 1 hour. And all I'm doing on the 1 hour is making sure the 1 hour looks like this. That's all I'm doing. The 4 hour is going to probably be one candle or two. All I'm doing is make sure there's multiple candles in the 1 hour that looks like this. And verifying. If I see some lower highs and lower lows under this blue line, I'm entering a sell. Because now the 1 hour and 4 hour match. And that's it. You only need 2 time frames. I can remove all this. This. Don't need this. Don't need this. You really don't even need this, but you can keep it just in case. This is the only time frames you need right here. This is it. Like, this is it right here. And I kid you not, like, you guys see my stats when it comes to this. Don't confuse yourself with trading. Don't make it don't overcomplicate it at all. Like, literally don't overcomplicate it. So, with that being said, this week we're sitting in a huge no trade zone, but we'll see how everything goes. Maybe price ends up selling off and we can get that sell off. I'm down for whatever. If it sells, I'll sell it. If it buys, I'll buy it. You know me, I don't care. Wherever the money's at, I'm at. With that being said, thank you guys for watching the video. And yeah. All right, so we're going to break down pretty much how I like to trade. If you've watched part 1, it's going to be similar to that, but I'll break it down once again in the same video. So with this being said, everything I do is off of the 4 hour and 1 hour time frame. These are the only 2 time frames that I use. I no longer use the 15-minute time frame for entries. The reason why I don't use 15-minute time frames for entries is because sometimes the volume is a little bit excessive throughout New York session. Break structures a lot on the 15-minute time frame, so a lot of the noise is cleared out by trading on the 4 hour and 1 hour time frame. So with that being said, I mark up on the 4 hour time frame. So basically what that means is whenever I'm looking for a setup, I'm basically going off of those levels. I'm not going off of anything else but the 4 hour. So if it's above a 4 hour level or below a 4 hour level, that will determine my entry, which comes off of the 1 hour. So with this being said, 4 hour markup, right? 4 hour, I mark up. So basically what that looks like is I'll come here, I'll look at where current price is at, and I'll say, okay, what created or how did price get to this level? So normally I would go back, drag down a little bit, or if it's coming down, I would drag up. So in this point, I would be dragging down and I'll be looking for the level that it bounced off of. So we could use this level, we could even use this level, but that's how I would do it. Now, how did I get into the setup? I'll mark that up for you. So what I basically did was I had already these levels marked out. So the reason I had these levels marked out is because price was on a downtrend and then it started to pick back up. Then we had a bullish push above a high level. So these are lower highs because these highs are lower than the previous ones. Lower highs only happen in downtrends, right? So the fact that price broke above that told me that this could get bullish above this blue line. Now, with all that being said, since I have this 4 hour marked up right here, anything above this level is considered bullish to me. Now, also, when it comes to levels being marked up, if I'm looking for an entry point, if I'm looking for a setup, I also have to look at the things that could be going against my setup. So in this case, I already have the indication, the correction, right? That correction, this level can no longer get broken. And I have to pay attention to that because that is the level that I need to make sure that my trade is validated. A lot of people they only look at what they're looking for and never look at what could go against them. So that way I know exactly how to think whenever price is, let's say, breaking that level. So with this being said, now everything in between here is considered a no trade zone. And the reason why it's considered a no trade zone is because price is in between 2 levels, buyers, so buyers down here, and sellers. Now basically what that means is price here has sellers. And the reason why I get, or where I get that from, is the fact that sellers pushed at this level down to this level. So sellers are in control, but also with buyers, buyers push from this level back up to this level, push from this level back up to this level. So it's in fluctuation of buyers and sellers in the market. You need price to be on one side. It needs to take out. So, and let's put it this way. In order to place a trade, in order to place a trade, it has to break past either buyers or sellers. Let's just say it like that, right? So it has to break past either one, right? And the reason why I say this is because once it breaks past something, that lets you know that price has full control until it reaches that level again, right? So in this scenario, sellers got taken out. So these guys are sitting at this level. These guys got taken out. So buyers are in control to the what? Next levels. So sellers are always going to be at highs. This is a high. This is technically considered a high. These are going to be where sellers are at. So price is always going to go buy here to here, buy here to here. It's going to move a zone to zone. When it's in a no trade zone, that means buyers and sellers are in control. But when price is breaking above a zone, it's just moving zone to zone to zone, right? Until whenever it finishes, right? And with that being said, a lot of people confuse this. For some reason, I don't know why. A lot of people do get this confused. All I'm doing is looking at where price went from buying to here, and I'm just looking for it to repeat. I'm not looking for anything special or fancy. The moment that price comes above this blue line, I press buy. The moment price comes below this blue line, I press sell. That's it. Nothing else. I see that price bought from here to here, so if it does it again, I'll buy it. The reason why I didn't place this trade is because it was a Sunday. Price just opened. It gapped all the way up off of the 6 o'clock opening on Sunday. That's not something I want to get into. I need New York session to bring some volume. As you can see, it was the great decision to make. Once again, go follow me on Twitter if you don't. At Trades by Sai, I pretty much call out every movement that I'm making, whatever I'm looking at on the charts, as long also on Instagram too as well. But with this being said, price built up, or not even built up, gapped up, and then ended up falling short later on during New York session, which I'm glad I made that decision. That just comes off of trading instinct, of trading for, it's been 5 years for me, so it's something that I'm used to. Not something that I can just be like, hey, every Sunday if price gaps up this way, don't get it. No, that's not what I'm saying. It's just I didn't feel 100% confident, and then my trading intuition ended up being right. So boom, I could have been wrong. It could have kept going up, and then I would have won if I would have got into a trade. But I didn't feel 100% confident, so I stayed out of the markets. No specific reason of why. I just didn't really feel too confident about the gap up. It was Sunday. The volume is normally a little bit different. So I just ended up not getting into that trade. So with that being said, the following Tuesday, Wednesday, I ended up looking for a trade. Price came back above this level, and I got on the 1 hour time frame. So for me, a lot of things here, because people on Twitter started freaking out and everything. So for me, I got into this trade once price already gapped all the, well, not when you say gapped up, it pushed up super heavy because of FOMC. I got into the trade right around here, and I was floating in profit for a bit before it sold off pretty heavy. Now, this is the thing that separates me from other traders. Of course, me and your risk is going to be different, but also as well, you're so used to traders telling you, you gotta have the smallest stop loss to be profitable, X, Y, and Z, and they call me a high risk or whatever the case might. You're taught to have like that little bitty stop loss so you can protect your capital and all this. I'm protecting my capital regardless because I'm using a proper risk management for myself, right? If you can't put whatever lot size you want, lower your lot size, or you can't put whatever stop loss you want, lower your lot size. A lot of people can swing trade, but they're just so like they're so like fixated on having the smallest stop loss and tight stops and all this and that, where they don't even allow their room. They don't allow room for their trades to even breathe. They don't even allow price to do what it needs to do, because price can fluctuate as much as it wants. As long as it doesn't break structure, it's still valid. Nothing makes this invalid. Just because price sold off, that doesn't make it invalid, because remember that 4-hour time frame is where price is trying to pick up at. That 4-hour time frame is exactly what price is going off of. Once again, I mark up off the 4-hour because that is where everything plays a part, right? So the fact that the 1-hour time frame came above this level told me that price on the 4-hour time frame is looking to later go bullish, right? So with that being said, we ended up getting a rejection. Price came down, stayed at this level once again. So once again, testing these levels like it did before. As long as it didn't break, price was still valid, ended up pushing off of this level and then coming back above here, which is where we're at currently. So right now, price is stalling at this high, but that's okay, right? Because at this point, I could either take partials or I could look for price to push for more. It's up to me at that point. As long as price does not break the levels on the 4-hour time frame, everything is a-okay. And if we was to mark up, this is the 4-hour candle close. I use candle closes for when I'm marking up, because that means to me it's a closed deal. That means that price is saying, hey, this is where we're finally stopping at. A wick to me is not really the same, because a wick is like price attempted to but failed to do so. I like when everything is certain, right? When things are certain, that's how you know that you're in a good trade. So with that being said, the 4-hour did close above here. So we do got closed candles above these highs. So that's good. This next one could possibly just be dragging back to retest, dragging back down to here to just give a correction, just for it to go up and create a new high. So here it could make a higher low. We could see possibly like something like this, where it ends up making a higher low and then progressing a higher later on. So see that higher low, and then we can see something like this created. So higher low, boom, and then price goes up and creates a higher high. Things like that can happen. So with that being said, all I gotta do now is just be patient. Now it's down to patience and trusting the higher time frame. A lot of people can't even trade this way because they don't trust the higher time frame, and they're rushing to make money. In order to trade like this, you have to trust the higher time frame. You have to trust the basic fundamentals of price doing what it needs to do, right? If price makes a high, you have to trust that it's going to make a higher low. If price makes a low, you have to trust that it's going to make a lower high. It's not something that you can do overnight, but just taking that deep breath and being like, you know what? Okay, like I'm just going to let whatever happens, because you already placed the trade. Once you place the trade, your money is already on the line regardless. So you might as well just put your trust into the whole chart at that point, because, hey, you already risked, right? It's like, I don't know, something crazy. Like, it's like going into the bank with a gun. Even though you haven't robbed nobody yet, even though you didn't rob nobody yet, you might as well just do it. You might as well just go with the whole plan, because you walked in with a gun. So now everybody thinks that you're finna rob them. So you might as well just do it. You might as well. You might as well. Because you're in there, so it's like, you might as well. So it's the same with trading. Like, once you place that trade, you might as well just trust the whole trade and just let it do its thing at that point. Yeah. With that being said, I keep it as simple as that. 1 hour time frame for entries. 1 hour time frame for entries. And the reason why I look for entries on the 1 hour time frame is because it just matches with the 4 hour. As long as the 1 hour and 4 hour are combined together and they look identical, and they correlate. Sorry, that's the word I was looking for. As long as they correlate, I know that the 1 hour is building up into the 4 hour. So if I'm seeing bullish, so if I mark up and I say, okay, above this blue line for the 4 hour time frame, anything above that blue line, the 4 hour is going to be bullish. If the 1 hour is above that level, that 4 hour level, I know that 1 hour is trying to build for me to see the 4 hours going to be bullish, right? So with these being said, I keep it very simple. With entries is nothing. It's literally nothing. All you're doing is going to that 1 hour time frame. Oh, price made a new high. It broke above here, right? It broke above this high. It broke above this high. I see that it's bullish. It's going back above here. That's it. Nothing else. Is the 1 hour bullish? Okay, it broke a high. It's back above that 4 hour level. Into the trade. That's it. Nothing else. I try not to overcomplicate it. If I lose, I lose. That's a part of the game. If I lose, I lose. I'm already in trading. So I'm not finna sit here and be so scary where I don't take trades or I don't take a risk. Take the risk. You're already in a trading, like you're already in the trading space, trading industry. You're taking a risk regardless. So you might as well just go all in. Not saying go all in on your account, but hey man, hey, that could work too. But regardless of the fact, you're in trading. Stop being a bitch. Just get into the trade. If price is breaking above a high, take it. If price is breaking below a low, take it. Especially if price has already repeated it once before, just take it. Take it. Like Diddy, just take it. Anyways, love you guys.